So although fiscal and monetary easing wasn't really expected to solve the supply and demand side shocks that we've been seeing to the economy due to the coronavirus storm, it has been more about providing liquidity to governments, to companies, as well as to the financial markets in general. And when it comes to central bank announcements, so far it's been rate cuts almost across the board. And when it comes to surprise rate cuts, we did get two more of them out of the Bank of England, 0.5%, as well as the Bank of Canada on Friday with another 0.5% reduction. As for the ECB, although they kept key rates unchanged, they did announce additional asset purchases to the tune of 120 billion euros between now and the end of the year, as well as a new TLTRO program. And when it comes to the Fed, well, they intervened heavily late last week with significant liquidity injections into the financial markets due to a liquidity crunch that was being experienced there due to a sell everything moment. Now, in terms of next week, it starts off with a string of Chinese data, and obviously it's expected to disappoint significantly due to what's been happening over there and due to the lockdown and quarantine that they've been experiencing, even if production is slowly coming back online. There's also going to be a G7 virtual meeting in order to coordinate efforts with regards to COVID-19. On Tuesday, we get the Reserve Bank of Australia's minutes, but focus is really going to shift to what we get afterwards with UK employment, as well as Eurozone and German CEW sentiment figures, and US retail. Now on Wednesday, that's the big day, and that's because although the Fed has already reduced rates by 0.5% in a surprise move, money markets are still majority pricing in further rate cuts all the way down to the 0 to 0.25% range. There's also going to be AIA's oil inventories estimate expected to show another significant surplus, and Canadian CPI. Now on Thursday, two more central bank announcements, Bank of Japan as well as the Swiss National Bank, but in this case, their key rates are already in negative territory, so not really much room for them to maneuver. Lastly, overall, in terms of trading, it's been very volatile out there. Pivot points much more likely to break as of late. And although previously it was more about risk on versus risk off, as of late it's been more sell everything versus buy everything. So keep those links in mind.